We're a Bitcoin treasury company, so we're securitizing Bitcoin. We're providing high performance equity. We're also providing convertible bonds. We've provided other kinds of bonds in the past, but primarily our job is to bridge the traditional capital markets that want bonds, or they want fixed income, or they want equity, or they want options. And we plug that into the crypto economy, and we use Bitcoin as the vehicle to do that.
What percentage of the public do you think understands Bitcoin at this point? Because I don't know if it helps to go into your strategy, what you just tweeted about. If people don't even understand Bitcoin, and I still see it everywhere, that it's air, or that it's not like gold because you can't make jewelry out of it. Believe it or not, still people saying that because you can't touch it, that it can't be real and it can't represent money. So can we go into how you're arbitraging it to make a return?
Yeah, here's what you need to know.
Okay.
The S&P is about 15 ARR for the past 4 years, and the volatility of the S&P is 15.
Okay.
If you want to own a commodity like silver or soybeans or gold, they have very, very low performance, less than 15%, 5%, 0%. You don't really want to hold soybeans for 100 years. And sometimes they have volatility, but it doesn't last that long. Bitcoin is 60 volatility, 60 ARR, and it is a legal commodity, but it is an economic scarcity. It is the only commodity invented in the history of the human race that's absolutely capped. And so that means you can expect it to keep going up. If I can give you a commodity that outperforms the S&P index, if I can give you a commodity that's more volatile than the S&P index, you can put 100% of your liquid assets in that commodity per SEC rules. I can't do it with a security, by the way. So up until Bitcoin, people had to use gold or real estate as their commodity, or they have to use the US Treasury bill. Those are all underperforming the S&P, and they're less volatile. Bitcoin is the first thing you can use in your treasury that's more volatile, that outperforms the S&P. The result is, if I give you a security, Joe, that outperforms the S&P, how much of it do you want to buy? And if you're an ARB or an options trader, and I give you an option that is 4x the volatility of the S&P, or with MicroStrategy, we're 10x the volatility of the S&P, how much of it do you want to trade? So Bitcoin's unique in the history of the capital markets. It's the first scarcity commodity, outperforming the S&P, more volatile than the S&P, that you can put on your balance sheet.
Volatility at sometimes is not always a good thing. I mean, it's great when something's going higher. But don't think that there'll be a drop or a significant drop that comes along? Have we moved past that because of the regulatory changes that have taken place?
I think it'll remain volatile because it's a 24/7, 365 global asset. You can panic sell it on Saturday night. You can enthusiastically buy it on Sunday morning. That's a feature. Mm-hmm. That's not a bug.
Yeah, you've lived through some of the swings, but do you think we won't see the downturns like we've seen in the past just because of the changes we've seen?
I think it's going to surge through the roof, and then it's going to surge to 180 and crash to 140, and people will be freaking out about it again. But let me make this one analogy. Volatility is like fire, and some people run away from the fire, but Henry Ford put the fire into a carriage via an engine, created an entire industry, and he gave humanity wings.
Attention all investors and stock market enthusiasts. Michael Saylor, co-founder of MicroStrategy, is stirring up the digital seas with a tidal wave of Bitcoin news. With a sly nod on social media, he foreshadowed a game-changing move. So what does Saylor have up his sleeve this time? Stay tuned as we unravel the implications of MicroStrategy's acquisition spree and what this means for the future of Bitcoin and digital assets. Welcome back to Investocracy Crypto.
Have to force you to move it back? I mean, wouldn't there be a natural tendency on your part to move the money to a place where you feel more secure with the money? Like, human nature is such that there's a lot of people in the world. Do you know that if you went to China and you gave everybody in China the option to move their money to the US, not all of them would, but a lot would, enough so that the Chinese government makes it illegal to do so. right? The reason there are capital controls, there's a limit of $50,000 a year, is because if people could, they would. So there's a natural tendency of people to want to move their capital from a less secure, more chaotic, more uncertain place, maybe where their property rights are less. I mean, you remember remember in Cuba when the boat people, when everybody wanted to leave Cuba and come to Florida, right? People generally want to move from the less secure to the more secure place. They want to move their person, they want to move their money, etc. It's human nature. I think if we come to this siphon analogy, well, there's just so much energy that gets released when you move from an uncertain, unsafe environment to a more certain, safer, more sound environment. That sometimes you don't have to convince people. Like, for example, a lot of times, if the head of the household could leave a war zone, don't you think they'd bring their entire family with them? Like, the kids might not want to go. My dad made me go to places I didn't want to go. You know why? When I was growing up, because his job. You know, how many children go to a place they don't want to go because their parents get a job? They're chasing money, Tom. So people, why did everybody come to the New World? Money. Everybody comes up with different ideas. It was all about property rights, and property rights was money. That's why the DuPonts came. That's why everybody came. So generally, you will find, why did people go west? Money. They went west for land. They went west for property. So if you come back to MicroStrategy stock, well, MicroStrategy capitalized on Bitcoin, and our stock started working. So people started buying the stock, and it was volatile. Well, it's so volatile that we have $100 billion options market that's formed on top of our stock. So our company went from $1 billion market cap to $100 billion market cap in 4 years.
In the high-stakes world of stock trading and corporate acquisitions, Michael Saylor has become something of a legend. Much like a captain charting his course through uncharted waters, Saylor has led MicroStrategy to amass a staggering 450,000 BTC, positioning the company as the largest corporate holder of this digital gold. It's as if he's turning the company's looming fears into exuberant potential, clutching to Bitcoin like a shipload of precious spices in a maritime adventure. Saylor provocatively suggests that the United States Treasury cast away its ancient golden shackles and convert its reserves to Bitcoin. Can you picture it? Gold-covered vaults turned into digital fortresses, each byte more valuable than the last.
The people that discover Bitcoin are, when you live in Nigeria and the bank or Lebanon and the bank freezes your assets, and you're either going to starve to death and be bankrupt, or you're going to have learned about Bitcoin, they have a need to know. If you live in a hyperinflating economy in Russia or in Venezuela or in Argentina, you're going to know. If you remember your family fleeing Nazi Germany in the 30s and losing everything, if that story's been told to you by your grandfather or your great-grandmother, right, then that resonates, and you think, yeah, I think I'd like to be able to flee with my money, when the government goes bad on me. So I think that the message of this is shareholders in a well-run public company do whatever management tells them because they're not looking to pick a fight. And if you're an affluent investor in the first world, you're ingrained in your conventional wisdom, and you don't have a need to know. It's not that you're not smart. I mean, the world's full of very charismatic and brilliant, hardworking, rich, powerful people. That is not the criteria for discovering a new technology. The analogy I give you here is Led Zeppelin. A bunch of teenagers and 20-somethings pick up electric guitars and they create Led Zeppelin and rock and roll. And there were probably some very genius classical musicians in Carnegie Hall around the same time. And if you ask the music critics what they thought and the music professors what they thought, And the classical musicians, what they thought, they would said, this will never amount to anything. This is bad for the society.
Joining him is Anthony Pompliano, a name synonymous with digital asset advocacy. Pompliano's vision aligns with Saylor's, urging America to seize the day by building a Bitcoin reserve. In a world where time is money, our two financial mavens insist that the clock is ticking and that America could risk being left behind. Adding to the narrative is the larger picture, a proposal for a crypto regulatory framework in the U.S. Saylor's vision extends to the digital markets, reaching a towering $10 trillion capitalization and pushing the boundaries of digital asset markets to $280 trillion. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Look, you're the world's greatest piano player, and someone invents an electric guitar, and you're 70 years old, and they say, what do you think of the electric guitar? And you're like, it's a brutish instrument, for long-haired hippies.
When I talk to people that really understand Bitcoin, you go deep into those rabbit holes, you start getting people talking about how do we secure the network when we mine the last coin. So what's your take on that? How are we going to secure it?
Well, the network reward is a function of the block rewards of the miners, and they will continue between now and the year 2140. And the transaction fees. And the transaction fee economy is an open free market economy. If you want your transaction to be processed in the next 10 minutes, you have to be the high bidder. And there's only 5,000 slots. And so the most important 5,000 transactions in the world are going to get to the top of the queue based upon the transaction fee of the broadcaster. This is why it's important to have scarce block space, because as long as the block space is scarce, the transaction fees will trend up over time. And as more people want to do more transactions, they will bid up the transaction fees. And right now, they're a small fraction of the rewards, but I think 10 years from now, they'll be the majority of the rewards for sure. And I think by 2035 and onward, most of the revenue that comes from the miners will be based on transaction fees, and transaction fees are a durable business model forever. I mean, every real estate company, every financial service provider, they all work on transaction fees. I mean, it's fine. Like, I want to move $1 billion from point A to point B. Would I pay $10? Of course I would. Would I pay $100? Sure.
The saga of Bitcoin investment is far from over. And as the narrative unfolds, the opportunities become ever more tantalizing. For those contemplating an investment in this bold journey, now appears to be an opportune moment. With Bitcoin markets steadily expanding and the push for a strategic reserve gaining traction, the digital currency's future seems promising. So, what do you think? Are these digital pioneers charting the course towards a prosperous Bitcoin future, or is it a voyage fraught with too many risks? Your opinion is not just valid, but vital. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.